Chapter 13, Overview of Internal Control. Companies establish goals and objectives and then assess the risk of achieving those objectives. As a response to the assessed risk, the company may design and implement internal control to have a reasonable assurance that the objectives will be achieved. Assessment of control risk and consideration of internal control are important steps in the audit process. Control risk is the risk that the entity's internal control may not detect or prevent a material misstatement. For the nature and purpose of internal control, let's start with a definition of internal control. It is a process designed and effected by those charged with governance, management, or other personnel to provide reasonable assurance about the achievement of the entity's objectives. The entity's objectives have three categories. First is the reliability of financial reporting or the financial reporting objective. Second is the effectiveness and efficiency of operations, the operational objective. And third is the compliance with applicable laws and regulations, and that's the compliance objective. Embodied in such definition of internal control are four essential concepts. So the first concept is that internal control is a process, meaning it is not an end in itself. Instead, it is a means of achieving the entity's objectives. Second concept is that internal control is effected by those charged with governance and management, and by other personnel. The responsibility of the management is to establish a control environment and maintain policies and procedures to assist in achieving the entity's objectives, while the responsibility of those charged with governance is to ensure the integrity of accounting and financial reporting systems through oversight of the management. The third concept is that internal control can be expected to provide reasonable assurance of achieving the entity's objectives. Note that what is expected is only reasonable and not absolute assurance. That is because of the inherent limitations that may affect the effectiveness of internal control. Examples of these inherent limitations are the usual requirement that the cost of internal control should not exceed the expected benefits to be derived. So for example, in small companies, it would be impractical kung masyadong costly yung internal control system nila. Second example is the reality that human judgment in decision-making can be faulty and subject to bias. So there's always the risk of having human errors. Internal control can help achieve organizational, operational, and financial goals, but it cannot ensure organizational success. It can help prevent loss of resources, but it cannot ensure absolute protection of assets. It can support reliable financial reporting, but it cannot ensure the reliability of financial reporting. It can support compliance with laws, regulations, and internal policies and procedures to avoid damage to reputation and other consequences, but it cannot ensure absolute compliance with laws, regulations, and policies and procedures. The fourth concept embodied in the definition of internal control is that it is designed to help achieve the entity's objectives. Note that the achievement of objectives depends not only on management decisions but also on competitors' actions and other factors outside the entity. So remember that internal control is designed only to help achieve the entity's objectives. It's not designed to absolutely assure the attainment of the said objectives. Let's now proceed to the definition of internal control system. Internal control system refers to all the policies and procedures or internal controls adopted by the management of an entity to assist in achieving the management's objective of ensuring, as far as practicable, the orderly and efficient conduct of its business, including adherence to management policies, safeguarding of assets, prevention and detection of fraud and error, and the accuracy and completeness of accounting records, and the timely preparation of reliable financial information. So yun yung mga objectives ng management. This definition is provided in the Philippine Standards on Auditing. Now the elements or the components of internal control. Internal control structures vary from one company to the next, depending on factors like the size of the business, the nature of operations, whether the business is engaged in service, merchandising, or manufacturing, or other sectors, geographical dispersion of activities, whether it's providing or distributing products or services to other areas, and organizational objectives. So the 5 components of internal control are C, control environment, R, risk assessment, I, information and communication, C, control activities, and M, monitoring. So the first one is control environment. It includes the overall attitude, awareness, and actions of directors and management regarding the internal control system and its importance in the entity. A strong environment does not by itself ensure the effectiveness of the internal control system. There are subcomponents of the control environment. So the first is communication and enforcement of integrity and ethical values. The management should establish ethical standards that discourage employees from engaging in dishonest, unethical, or illegal acts that could materially affect the financial statements. For example, there should be business practices that set realistic performance targets rather than concentration on high pressure na target na sales or target na profit. Second is commitment to competence. The entity should consider the level of competence required for each task and translate it to requisite knowledge and skills. Third, participation by those charged with governance. So those charged with governance, na-cover na natin yun sa first part ng course natin, yung sa SEC Code of Corporate Governance. If you can remember, we said that the entity must have an audit committee which will be responsible for overseeing the financial reporting policies and practices of the entity. Fourth subcomponent is the management's philosophy and operating style. The auditor should assess the management attitudes towards financial reporting and their emphasis on meeting the projected profit goals because this will significantly influence the risk of material misstatements in the financial statements. Organizational structure. This provides a framework for planning, directing, and controlling the entity's operations. So there should be appropriate lines of reporting. Assignment of authority and responsibility. Appropriate methods of assigning responsibility must be implemented to avoid incompatible functions and to minimize the possibility of errors because of too much workload assigned to an employee. Human resources policies and procedures. The entity must implement appropriate policies for hiring, training, evaluating, promoting, and compensating the entity's personnel because the competence of the entity's employees will bear directly on the effectiveness of the entity's internal control. The second component or element of internal control is risk assessment, the entity's risk assessment process. The entity's business objectives cannot be achieved without some risk. So risk assessment, identification, analysis, and management of risk pertaining to the preparation of FS. The basic concepts of the entity's risk assessment process are relevant to every entity, regardless of the size, but the risk assessment process is likely to be less formal and less structured in small entities than in larger ones. The third component is Information and communication system. The information system consists of infrastructure, physical and hardware components, software, people, procedures, and data. The information system encompasses methods and records that identify and record all valid transactions, describe on a timely basis the transactions in sufficient detail to permit proper classification of transactions for financial reporting, measure the value of transactions in a manner that permits recording their proper monetary value in the financial statements, determine the time period in which tran- transactions occurred to permit recording of transactions in the proper accounting period, present properly the transactions and related disclosures in the financial statement. The SEC Code of Corporate Governance provides that companies should maintain a comprehensive and cost-efficient communication channel for disseminating relevant information. Communication, it is a continual iterative process of providing, sharing, and obtaining necessary information. So only necessary and relevant information. It can be made electronically, orally, or through the actions of the management. It can take such forms as policy manuals, accounting and financial reporting manual, and memoranda. Then the fourth component of internal control is control activities. Policies and procedures that help ensure the management directives are carried out. For example, that necessary actions are taken to address risks that threaten the achievement of the entity's objectives. There are four major categories of control procedures. First is performance review. Examples: comparing actual performance with a budget, forecast, and prior period performance. Investigating performance indicators based on operating and financial data, and reviewing functional or activity performance. The second category is information processing controls. Policies and procedures designed to require authorization of transactions and to ensure the accuracy and completeness of transaction processing. There are two classifications of control activities: general and application controls. General, these are the controls that prevent or detect errors or irregularities for all accounting systems, while application pertain to the processing of a specific type of transaction. Examples of control activities that are related to the processing of transactions are proper authorization of transactions and activities, segregation of duties, adequate documents and records, access to assets, and independent checks on performance. Third category of control procedures is physical controls. Physical controls are the controls that encompass the physical security of assets, authorization for access to computer programs and data files, and the periodic counting and comparison with the amounts shown on control records. Example ng physical controls: petty cash should be kept locked in a fireproof safe. Cash received by retail clerks should be entered into a cash register to record all the cash received. Accounts receivable records should be stored in a locked fireproof safe. If the records are computerized, then adequate backup copies should be maintained, and access to the master files should be restricted via passwords. Raw material inventory should be retained in a locked storeroom with a reliable and competent employee controlling access. Perishable tools should be stored in a locked storeroom under control of a reliable employee. Manufacturing equipment should be kept in an area protected by burglar alarms and fire alarms and kept locked when not in use. Marketable securities should be stored in a safety deposit vault. Then the fourth category of control procedures, segregation of duties. It is assigning the responsibilities of authorizing transactions, recording transactions, and maintaining custody of assets to different people. So those three activities, yung authorization, yung recording, and yung custody, must be assigned to different people. The purpose is to reduce the opportunities of allowing any person to be in a position to both perpetrate and conceal errors or fraud in the normal course of the person's duties. So example, if the business is using a manual accounting system, then those three duties could be assigned to different individuals. Then when the business uses technology-based accounting system, then pwedeng may control access sa terminals via use of passwords. Then the last component of internal control is the monitoring of controls. It is a process that an entity uses to assess the quality of internal control over time. It involves assessing the design and operation of controls on a timely basis and taking corrective action as necessary. It is accomplished through ongoing monitoring activities and/or separate evaluations. Ongoing activities are built into the normal recurring activities of an entity. These include regularly performed supervisory and management activities. For example, continuous monitoring of customer complaints, while separate evaluations are performed on a non-routine basis. Example, periodic audits by the internal auditors. And for the last part, we have the COSO's internal control, the integrated framework. COSO is a committee of sponsoring organizations of the Treadway Commission. It is a joint initiative dedicated to provide thought leadership through the development of frameworks and guidance on enterprise risk management, internal control, and fraud deterrence. The 2013 framework sets out 17 principles representing the fundamental concepts associated with each component. Because these principles are drawn directly from the components, an entity can achieve internal control by applying all principles. So all principles apply to the three categories of objectives: operations, reporting, and compliance objectives. So under control environment, there are 5 principles. Demonstrates commitment to integrity and ethical values, exercises oversight responsibility, establishes structures, reporting lines, authorities, and responsibilities, demonstrates commitment to competence, and enforces accountability. Under risk assessment, there are 4 principles. Specifies appropriate objectives, identifies and analyzes risk, assesses fraud risks, identifies and analyzes significant changes. So under ng control environment, for example, there is a risk that the management lacks commitment to integrity and ethical values. Then, ang pwede nilang control doon ay yung employ ng human resource procedures in violations of the Code of Ethics and Conduct. Then, the procedure to test whether or not such control is present is having staff surveys on integrity and ethical behavior. Then for risk assessment, an example of risk is the risk that the risk is not being monitored or the risk that there is no monitoring. Then ang pwedeng control dun is evidence on risk monitoring either by the management and or external oversight bodies. Then to test whether such control exists, pwedeng mag-conduct ng interviews. And under control activities, there are 3 principles. Selects and develops control activities, selects and develops general controls over technology, deploys control activities through policies and procedures. An example of risk ay fictitious sales. Then, to control such risk, there must be segregation of duties. For example, iba yung magte-take ng orders, iba yung magre-record ng sales, iba yung magre-receive ng payment. And to test whether or not such control exists, or the procedure is to observe the processing of orders, to inspect the sign-offs. Then for information and communications, there are three principles: uses relevant information, communicates internally, and communicates externally. Ang internal communication, it is throughout the organization or within the organization. Kapag external, there are two parts. Merong inbound na communication ng relevant internal information, so from outside to inside, and then information to external parties in response to requirements and expectations. So, communication ng information from the inside papunta sa external parties. Example ng risk dito is that there is no proper internal communication. Then, the proper internal control is having help desks and incidents register. Then, to test whether such control exists, pwedeng magkaroon ng mga personnel surveys on communication. Then lastly, monitoring activities. Principles are conducts ongoing and or separate evaluations, and evaluates and communicates internal control deficiencies. Example ng risk is the risk that evaluations are not being performed. Then yung control para doon ay having internal and external audit results. Then to test whether such control exists, pwedeng magkaroon ng interview with the management. So when a component and one or more relevant principles are not present and functioning, or if the components are not working or operating together, then ibig sabihin, there is an existing major deficiency. So pag may major deficiency, nare-reduce yung likelihood na ma-achieve ng entity yung objectives niya. So kapag wala yung isa sa 17 principles na to, it doesn't mean na hindi na ma-achieve ng entity yung objectives. It just means na nare-reduce lang yung likelihood na ma-achieve yung objectives. So that's all for the overview of internal control. Thank you.